Good morning. Good morning. How's everybody doing? Enjoy your long weekend? Yeah, it was nice having 3 days off. Very, very mechanical, sort of electronic trading this morning in our futures. Wow. I mean, the stuff I've been talking about over the last couple of weeks, it's really, really seems to be coming into bear. I don't know if you guys have noticed that yet. Hey Raj, what's up? Just little things like this, stuff that most people won't notice. The bottom of those candles not being able to take that level. Same thing here. Very, very mechanical trading. You can see it over and over again. It's the magic of the algos. So if you're long, you can use that information to stay long. If you're looking for, if you're a short seller, like I just took a little short here when it did a look above and fail of 58 and 3/4. I sold 58 and just in these 2 minutes I put a 55 bid. Sold 58, bought back 55 just as a test trade. Now, if you were looking to hold that trade longer, right? As soon as the market came up and showed you a bid, right? When the market shows you a bid, you've you've got to sort of pay attention. Yeah, overnight price action is a bit more predictable because it's very mechanical, right? So you can actually trade some of these things. Like you could have gone long 56, 57 and put your stop here. You could have stopped out at 55 and a quarter and then sold 58, 59. It's just incredibly, incredibly precise that these markets, you as a new trader, right? If you can learn how to trade Globex, now Globex is 6 p.m. New York time, right, to 9:30 in the morning, right, New York time. It's a long session. So no matter where you are in the world, unless you've got really bad trading hours, you can get away with trading Globex and not even trading RTH. You know, just amazing. If you had taken the look above, look below and fail here, and this is a valid look below and fail, it looked below 75.50 fail. You could buy 51, 52, put your stop here, sell some at 54, sell the rest at 58, and you got yourself a nice, even if you pull 6 points out of that, right? Pull yourself 6 points on one ES contracts. It's $300. 5 contracts, it works, right? But you got to pay attention, right? I mean, those trades are not available to people because they're subtle, right? You're watching that level. It goes up, comes back down, tests it. Sell orders are done. You buy some and you sell into strength, right? You could literally trade Globex and never trade RTH and still make 20, 30 grand a month, especially with the ranges that we're having now, right? Especially with the ranges we're having now. Now, overnight inventory is still short. I am using Thursdays references. Okay, because Thursday's the last RTH full session. So inventory was short. Our low was 75.13. We went down and we checked out that 75.11 and we were rotating up. So the targets are these little white dotted lines if you're a longer term trader. And you can use these ones if you're not. See, look at how that bid, there we go again, right? The fact that the market comes down, hits a level, and stops. See how it stops before that level? This space, those are buy orders. Those are buy orders, right? These are buy orders. And those buy orders, when they move up, mean that you should not be shorting because the buyers are following the sellers higher, as opposed to the sellers lowering price to capture the buyers. This is why you guys have trend lines, right? You guys trade trend lines, but you actually have no idea why they exist. The trend is the trend of the offer moving higher or the offer moving lower. See, it's simple, right? But they don't tell you that. They say, oh, it's a trend line. You trade it. What is it a trend of? Prices going higher. Why are prices going higher? Because sellers are raising price. Why are sellers raising price? Because they see buyers. It's really simple. And that's what our goal and our mission at Trading Syndicate is to take normal people and help them make money without overcomplicating all this jazz. Right? And if you learn how to read a candle chart properly, if you learn what's really important on a candle chart, it's going to save you so much time and aggravation and money, you know? Now, right now, there's not a lot of follow through over 75.60, but you can clearly tell that they don't need to sell it underneath these candles here, right? Very simple. Look. So if you bought 60, go throw a 61.5 offer out and see if you can sell it, right? Sell, buy 60, sell one at 61.25, sell one at 61.5. Make yourself a point and a half, right? Practice at least, so you learn how to think intelligently and trade intelligently, right? Hey, Moran, this is the thing about this business. It's actually very, very, it's tradable. You just got to have a little bit of patience. And the market, if you actually pay attention, the market will tell you where the bids are. That's your job as a trader. Your job as a trader is to find the bid and find the offer. Okay. Now for longer term traders, I've got a 1 hour chart that I was messing around with here. You guys let me know if this works for you. You can see that there is quite a bit of volume in the area that we're in now, that 41 to 68 area. There's quite a bit of overhang. So let's see if we can, because we've been distributing, right? We've been distributing this position up here, and then we faded it down, caught a bid. So let's see if we can take out those kind of levels here. Okay. This is that little weird session from Friday. That's, that electronic session. This is the Sunday night. Sorry, the Thursday session. Sorry. So there's Thursday, then Thursday night is missing, but this is Friday, and then this is last night. So our point of control is here. That's where the cost basis is. We're in pure distribution, right? And we should see some resistance somewhere along here as we come up to these areas. And to correct inventory, we would have to go all the way to the 5 p.m. close from Thursday, which is 75.75. Any questions? So right now we're just seeing pure, you know, what did we do in the overnight? We did a look below and fail of the Thursday low, right? So how many people do you think are trapped short under 38, 36, sorry? How many people do you think are trapped short down here? Because as soon as we came back into Thursday's range, that was your signal to cover, right? And straight up. Now let's see when London opens if we can get any kind of inventory correction down. And I'm looking for 75.68 and a half. And let's see how well that 1 hour chart works. Yeah, apparently a lot. Exactly, Moran. Before Globex opened, I wrote this little thing up, and I hope you guys read it, right? I said news affects order books, especially in the pre-open. When the market does open, it could gap down, and that's exactly what it did. It gapped, took out the previous day low, and then had this very strange back and forth. That is very normal in these markets, right? So you use those markets to get inventory at cheaper prices or to sell inventory at ridiculously high prices depending on the news cycle, right? Right? If it bounces off the previous day's high or low, then it tells you the orders at those levels and you can trade accordingly, right? And let the price develop as the session trades. It'll lay out some structure and you will know where the buyers and the sellers are, right? See, every time they lower the ask, you guys see what's going on? So they take price up and then they bring price down to find a buyer. When they find a buyer, they lift price again. That's what these charts are doing, just so you guys know, right? So buyers line up here, they raise price. Buyers follow, they keep raising prices. Then the buyers stop following, you lower price, it entices them, they come in again. Same thing. That's why you guys get a trend, right? That shows if you're an order flow trader, right? Everybody loves using that word, right? Order flow, right? This is what you're looking at. This is actually order flow trading here. The transactions are being shown on a chart. So you can see the business transactions in a graphical format that your eye can use to make sense of, right? And that's what we're trying to show you. But we're trying to show you that without you having to memorize 300 candle patterns and all this stuff, right? You don't need to worry about the wicks. You don't need to worry about any of that stuff. All you got to worry about is the top of the candle and the bottom of the candle. That's all that matters. It doesn't matter if it's a wick or not or whatever the hell you guys call it. So you get a candle and the top of it and the bottom of it. The top of it is where the sellers start selling. The bottom is where the sellers stop selling. I mean, how simple is that? If I was to write a candle book, it would be like 3 pieces of paper, right? Like you look at these guys, what they write like a 400-page book on candles. If I would write a candle book, it'd be a 2-page book, just 2 pages, maybe even just one. But it's so simple that people wouldn't believe it. And that's our edge. Our edge is that people are so brainwashed, right? They're so brainwashed that they don't believe reality. And that, my friends, is your edge as a trader. You don't realize it, but that's your edge. People are so brainwashed, and because they have a 10-second attention span, you can rob them blind, right? Your edge is that you don't subscribe to that. You pay attention and you actually understand how the business works. Now, we have a poor high, which means we have competitive selling at 75, 62 and 3/4. Okay? That's what you guys call a double top, right? As London opens, London will try and get lower. There will be bids here at 50 because when we took the high of L period, that the shorts are trapped here. That's why the market can't get down past 61 right now, and it is rotating up. See? If you draw where the traders are trapped short, there's single prints there, right? You can see the single prints. Just a couple of them, right? There you go. Because the traders are trapped under 60. So when we took out 60, anyone who didn't have a hard stop is bid to cover there. That's why you have buy orders there. That's why the market went down 2 ticks, turned and moved higher. That is information you can actually use. That is actual actionable information. So if you were thinking of shorting London, that would stop you from shorting London and you'd save yourself some money, right? Why not? Why not save yourself some money? Do you guys just like throwing money away? Simple. Hey, Sergio. Welcome. Thank you for that. We need to make trading simple for people because confusing them is not helping them make money. Remember I said I was looking for 75.58.5. Okay. Sorry, 75. My God, I need my glasses. 75.68.5. Sorry, guys. 75.68.5, which is the top of Friday's little day there. So do you see what happened? Everybody who shorted London down here, they're all coming into cover now. That's why you're getting these big green candles, right? These are like, excuse my language, these are the holy shit I've got to cover candles, right? Because what happens is everybody shorts the living heck out of this thing here, right? When price dips, everybody starts hammering it, and then they short, and then they add here. You see? And when they realize that it gets over that standard deviation, they go to cover. It's like, oops, all the supply is here and here and here. So the people who have supply raise price, and that's why you get these big holy shit, holy crap candles, right? It's like, holy crap, I got to cover, and all of a sudden the supply is gone. That's why if you learn just simple stuff, it'll really help you. What do single prints mean to you? They represent a short position. So when this candle named K, when it took the J top, anyone who was using that as a short, as a stop, got stopped out. Larger traders don't use hard stops, so they will put their buy orders here. That's why the market, when it retraced, it couldn't get back down under 60. So single prints to the upside are a short position. Single prints to the downside are excess supply. Really simple, Sergio. And if you'd like to learn more, we are there every day at the tradingsyndicate.org. And it's the only trading room in the world that will teach you how to trade with common sense, right? It's common sense trading where things are simple and you just master a couple of trades and you make money, right? That's our whole thing. We need to make people money. We can't sit there and pontificate and talk about all sorts of complex strategies and, you know, because people don't make money off of that. They make money knowing where the bid is and they don't make money knowing where the offer is. Right? So we are 2 points away from target, no, 3 points away. We're at 65.5. I'm looking for 68.5 on that 1 hour chart that I posted in the room. So back here, if you were thinking of getting short, right? This and this, they told you, don't do it, right? The market was giving you clear signs not to short it. Remember the bids, right? The bids. When you see a market retrace and the bottom of those candles can't go and take out a level, bottom of those candles, that means that there's a buy. There are buy orders here and there are buy orders here, right? And there are buy orders here. These little circles, these are bids. You don't need any fancy software to see that. See, it's happening here again. Look. So if you were thinking of shorting 65, you'd go and you put some buy orders down here at 63, 64. And if those buy orders did not get executed, they didn't get filled, then you're like, oh man, okay, let's see where the bid is now, right? We're looking for the bid. We're going to come down and we're looking for the bid. And I bet you that bid is right here, right? The top of the K high where L took K. That's where people are trapped short, just like here. The top of the J high, that's where the bids are going to be. Market structure is the most important thing that you can learn because it'll actually help you trade intelligently, right? So say you got a little, your feet got happy feet and you decided to start shorting this area, right? You see, okay, the sellers are selling, they're stepping in here, right? We mark where the sellers are, right? So say you're shorting this area. I'm waiting for 68.5 for a look above and fail of 68.5, right? If that if that happens, then that's great. But if you are short and the market starts taking out the 66s, right? If we start offering above the top of that candle, you know you're in trouble, right? Because this was once again a backfill to find the bid. See the bid's moving up, beep, beep, right? The buyers follow the sellers. So if the sellers raise price, buyers raise the price that they're willing to pay. It's always been that way, right? Buyers are never in control. Only time buyers are really in control is when there is a fire sale. Then they can name their price, right? But as you see, that doesn't happen very often in this market because we have limited supply in these markets, right? So as long as we are underneath that 60, 65 and change, you can be a seller, right? You can say, okay, I'm shorting, great. But that's your warning level, right? There's your danger zone, right? You know, that's your Top Gun danger zone right there. You can stay short as long as we're not offered over 66, right? See, this is distribution. Nobody's willing to pay more than 66 for it right now, 65 and three quarter. So it's back and forth and back and forth. Now, if they can hold distribution and not break that 63 and a half level, then buyers will keep coming in. If we break 63 and a half, we'll go down to the 62, 61 level. So say you're short 64, 65, your stop is at 65 and three quarters, 66. You want to put some bids down. It's like put a buy order down at 62 and a half and see if you get a fill, right? Throw a 62 and a half buy order in and see if you get a fill. That'll tell you whether or not they need to lower the price. If they don't need to lower the price, the offer will pull back up over that blue line. This is the most common sense way to trade that ever existed. And this is how people used to trade before screen-based trading. They would just watch the offer and watch a level. And as soon as the offer started, say if you're short and it starts pulling up over that level, see how the bottom of the candle can't take the bottom of that candle? This is really simple, basic trading. And it's slow enough at this time of night that you can see that when we get up there that there's a seller right there, right? You can see the seller. Where the bid was, there's a seller because there's people that are trapped. Let's see if we can get a print. We get another print and the market moves up. So in this little back and forth, you could have a little balance. Let's see what happens. Give it some time, right? We still have 17 minutes left in this half-hour bar. So just give it some time and wait. Now, I know a lot of you are itching to short this thing, right? And if you are short, that's okay. That's fine. But your risk is here, right? So your risk is right here. Right here's your execution. Your entry is here. And then you'd go and put bids in here, right? That's for a scalp short. If you're position short, then 61, that's your ultimate destination. If that doesn't break, it'll just go like this. And what we're going to try and do is we're going to try and move that point of control from 75.40 up here. Why would we do that? Because that shows good distribution. It means sales are good tonight. You know what that means? right? We took the 75.40 product and we're selling it at 75.60. We're up 20 points. We're selling 1,000 contracts that we bought cheaper, right? So short 64 and 3/8, got a 72.5 bid in, it's not getting touched, right? We need to break that 63. Come on now, right? And this is how you trade with some sort of intelligence. If you know where the bids are, you know where to cover. If you know where the offers are, you know where to short against. You find a seller and you sell alongside that seller. When the seller stops selling, you cover, right? It's not rocket science, right? When you see them stop selling, you buy a little. And when you see them start selling, you sell into it. Get it? So you see there's a seller move down, right? You short. You put your stop here. You put your covering bids here. I put a 62.5 bid in there. When that bid, there's no way we could even get under 63. Buy it back. Don't be a dick for 2 ticks, right? Now watch. Next seller will be here. Top of the candles, my friends. All you need to know is the top of the candles are where the sellers are. So if you're long, say you want long 62, 63 or 63 half. You know there's going to be a seller at 65. There they are. Look. If that seller sees buyers, they will raise price and we'll get a print. There's a 65 quarter. There's the 66. And you knew to cover here. If you were short here, right, like I was, right? If you were short at 64 and change, and you saw this happen, you cover your trade, right? So now you're not offside. Somebody nod if they understand what I'm saying. Right? You saw that 62 half order did not get filled, right? Guys, hello, is anyone there? Do you understand what I'm saying? Okay. This way you can book a couple of points of profit or even a point and a half instead of getting stopped out. Ooh, I got stopped out at break even. What's the point of even doing business? Right? The market clearly told you that you had 3 candles with the exact same low and you were not able to take out that level where the white line is, right? It's really simple. Rewind this, play this over and over again if you're having difficulty with shorting. That's how you short with intelligence, right? When you lose your seller, you cover. We went on the ride with them. They stopped here. This is where you get off the bus because they're not going to sell it down here. So they tell you, hey, and they give you 3 minutes to cover. So it's not like you didn't have time. They gave you 3 1-minute bars and they showed you that they would not have to sell lower than 63. Get it? If you reason it out, if you actually talk through this stuff, it will start to make sense. Right? If you reason it out and you talk through the actual business that's taking place, then it'll actually start to make sense to you guys. Okay, we're creeping up on that 68.5. So let's see if we accept over 68.5 or do we, and I got that level from this 4-hour chart here. I'm not sorry, 4 hour, 1 hour, right? We're looking for 68.5. Okay. So that's how you guys save money, right? Because if I was still short 64 and I'm adding to it at 66, and you can see how the trade's getting out of hand, right? So the market tells you, hey, cover. right? This is like, psst, 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 buddy. See the bottom of that candle is exactly where it stopped. There you go. That's information you can use. All you got to do is pay attention. That's it. That's all you got to do. You just got to pay attention. It is too easy. The execution's not easy. But if you pay attention, you're already halfway there because you're paying attention to good information. So you're not wasting your time with crazy like technical analysis. There's nothing wrong with technical analysis if you have 10 years to waste. But the execution of what these people talk about is impossible. That's why nobody makes any money because you cannot execute sophisticated, complicated analysis structures if you are a retail person who's not used to thinking and acting like that. Right? Yeah, Dave, that you're supposed to leave the middle alone. Exactly. Right? So executing difficult, complex analysis is impossible for a retail trader to do. That's why when you see people who have like a 2-page trading plan, learn how to scalp. Learn how to scalp. You'll make money and then you'll be done with it. You won't have to be like, oh my God, I'm holding this trade for 16 hours. Just learn some practical, simple trading. So what did we get up to here? Came close to 68 and a half, right? Came close. So if you're shorting this same thing, right? Say you're short 66, right? 66, right? Where's your warning, right? There you go. That's where your sellers are. Now your sellers are here. If they start raising price, they're telling you, "Hey, we see buyers. Be careful." The sellers will tell you if you should short the market or not. Think about it. If they're lowering their prices consistently, it means they're marking down the product. They're putting it on sale. And that's when you short. You don't short when they're raising price. You don't know where the top's going to be, right? Let them tell you where the top is. Does that make sense? You have to allow the seller or the sellers, right, to tell you where the top is. Because they'll start lowering price. They only lower price because they have to, not because they want to, right? Remember they say, oh, sellers are pushing price down. It makes no sense at all. What seller wants to push price down? Hey, you got a car for 50 grand. Oh no, I want to sell it for 40. There are people willing to pay 50, but I want to sell it for 40 or 30. That makes no sense. When you think about these things that people say in retail trading circles, you'll just laugh because they make no sense if you actually think about them. Buyers and sellers are fighting each other. Sellers are pushing down price. When price is going up, buyers are in control. All of this is straight BS. What buyer wants to pay more? In what store have you ever gone? You go into Louis Vuitton to buy your wife some expensive piece of luggage or a purse, and the sales clerk attacks you with a sword because buyers and sellers are fighting each other. Does that make any sense at all? It makes no sense to me. It makes no sense in commerce at all. So if you're short 66, you know that there's some 64 bids, right? Go put some buy orders in, right? Take your profits, right? You're short at 66, buy them back at 64 and a half, 64 and three quarter. Take your profits, right? Take your profits. Don't be stupidly greedy, right? 66 to 64, a couple of points, make a little bit, pay the bills. We didn't quite get up to 68 and a half, right? Your wife attacks you. Hopefully this helps, guys. Hopefully this helps. Watch it again and practice your trading at night. Short sellers want price to go down, but they don't have the strength to push price down, George. That's what you don't that's the thing where you're missing, right? Yeah, exactly. It is like surfing. You're waiting for the right wave. Yeah, exactly. Short sellers want the price to go down, and that does exist in commerce. It's existed for thousands of years in trading. But once again, people don't understand the business of trading, so that's why they have trouble with this. The short seller, a smart short seller, George, only sells when he sees a wholesaler lowering price. See, if you're a short seller, you need to see that the sellers who are long are lowering price. That's all you got to do, right? Keep it really simple, my friends. Keep it really simple, right? The simplicity the simplicity of what's actually going on is what a lot of people have trouble with, right? But the business never changes, and that's why they don't change the name of it, right? That's why it's the futures market, stock market, right? Bond market. It's a market, so it is there to distribute inventory. You may not know about inventory because, you've never worked in the business, but every trader has an inventory. Every brokerage firm has multiple inventories. Market makers have inventories where it's like a storeroom for their goods. The market itself has an inventory, right? Once you get used to these concepts, it's going to make your life a lot easier. You're going to get away from this technical analysis and books about trading and actually get into the guts of business. If you get into the guts of the business, the problem is most of the people who teach trading have never sold 1 million shares into a market. They've never sold 180 million shares of stock over a 2-year period. They've never done any kind of distribution, so they don't know what they're talking about, right? So what I'm trying to do is help you guys by teaching you straight goods what's going on in a simple, clear way so you can actually execute it. And that's it, right? You're always waiting for the right wave. You don't have to take every one, right? You make 3 points here, 4 points there, 3 points here, it adds up, you know? You don't have to look for 30-point trades. You can make a nice living trading Globex. It's a beautiful time to trade, especially when we have a little action like today. And even today's choppy. It's not amazing, but you can still pull out 300-400 bucks, right? There's a margin raise, yeah, because of the war stuff, right? Yeah. Alrighty, my friends, have a great morning. If you want to learn how to do this properly, visit us at tradingsyndicate.org. We'd love to have you, and we will get you profitable. All you got to do is be able to pay attention. And if you're not too stubborn, we can help you. If you're too stubborn, then it takes a little longer. Thanks, everyone. Stay out of trouble. We'll see you for the next session at around 2:15 UK time, 9 to 9:15 US time. Have a great morning. Stay out of trouble.